Why central banks buy so much gold? Do you know that the world's central banks have gold reserves of more than 35,500 metric tons, MT? The majority of that supply has been accumulated since central bankers started going on a gold buying craze in 2010. Before that, central banks sold around 4,426 metric tons of gold between 2000 and 2009, making them net metal sellers. However, they have been net buyers for more than 10 years already, and as a result, central banks' gold reserves are expected to reach their highest level since 1990 in 2022, according to data from the World Gold Council (WGC). National financial institutions bought 656 metric tons of gold in 2018, breaking their 50-year record. Buying reached around 605 MT in 2019, a little less than in 2018. With only 255 metric tons added in 2020, the second year of reductions, it was much less than the same period in 2019. The sudden decline was linked to the fast-growing price of gold, which reached an all-time high of $2,074 per ounce in the middle of 2020. It is important to note that central banks increased their gold holdings by 455 metric tons in 2021, signaling a considerable uptick in demand following the decade low reached the year before. This year, central banks are anticipated to keep buying net amounts of gold. A 2022 WGC poll of central banks found that, up from 21% in 2021, 25% of respondents intended to increase their gold holdings. Central banks are a key component of gold demand. But why do they buy and sell the precious metal? And how do they decide when to do so? Stay with us to know the details. What is the reason behind all this purchase? Setting interest rates, governing monetary policy, and regulating the production and circulation of coins and bills are only a few of the main duties performed by central banks. However, maintaining the value of their national currency while averting the collapse of the financial system is their most crucial responsibility. This is accomplished by reducing inflation. Yet, as the current global economic crisis has demonstrated, a national bank may occasionally find it challenging to control the fate of a nation's currency. The rise in central bank gold purchases over the past 10 years can be attributed to this danger. A bar of gold always retains its worth, as the Dutch central bank states, or not a crisis that makes me feel secure. Therefore, a central bank's gold holdings are a sign of confidence. Let's tell you the reasons. Number 1. To mitigate risk. A well-known safe haven investment, gold is prone to perform well during uncertain and volatile market conditions. It is seen as an asset with no liabilities, which increases its capacity to reduce risk. Famously quoted as saying, "Gold is money. Everything else is credit." American banker and financier JP Morgan also emphasized the inherent benefit of gold's continued purchasing power. To protect themselves from a declining dollar or any other fiat currency, central banks look to buy gold. Gold's function as a portfolio or investment diversifier also contributes to its capacity to reduce risk. As a result, central banks have often kept sizable gold reserves to protect their financial systems. The gold supply gives a system the means to recover in the event of a collapse. In this way, gold fosters trust in the strength of the nation's financial system and its central bank. Number 2. To hedge against inflation. Another justification for central banks purchasing gold is to protect themselves from the impacts of inflation. Inflation can be defined as the increase in the cost of a certain basket of products. A nation needs investments unrelated to the dollar for inflation to not have a significant influence on its economy. This is where gold and other precious metals come in. Many people see gold as a gauge for the worth of foreign exchange products. The increasing price of gold is seen as the proof that currencies are being depreciated. Number 3. To facilitate stability and growth. The main goals of central banks are to support economic growth and stability. Banks must ensure their economies don't collapse as currencies depreciate further. As a result, gold is employed to regulate the size and rate of market expansion. Global Bullion research indicates that emerging economies are particularly vulnerable to free market excesses, and utilize gold to mitigate the risk using the central banks of China and Russia as examples. It says that owning gold keeps these excesses from completely devaluing money and wrecking the economy. Which central banks have the largest gold reserves? The largest central bank purchaser of gold is the US Federal Reserve. The US has 8,133 metric tons of the yellow metal on hand, more than double Germany's 3,358 metric tons holdings in the second position. With 2,452 metric tons, 2,436 metric tons, and 2,301 metric tons respectively, Italy, France, and Russia claim third, fourth, and fifth place. With 1,948 metric tons and 1,040 metric tons, China and Switzerland are in 6th and 7th place respectively. Japan, 8,455 metric tons, India, 760 metric tons, and the Netherlands are at the bottom of the list, each with fewer than 1,000 tons, 612 metric tons. Ever since, gold has fallen from its peak, trading for $1,850 in the middle of 2022. Central banks are increasing their gold reserves again due to the growing risks of a new global financial crisis. What are your thoughts on it? Do let us know your views in the comment section below. Thanks for watching.